Yeah, well, I mean, over the last month, we've seen 1.6% growth across the combined capital cities, 1.1% growth over the last quarter. But I guess the figures show, again, that Sydney and Melbourne are really the standout performers. We've also seen growth in both Canberra and Darwin, but the other four capital cities actually haven't seen growth. So it continues to be a little bit unusual. We're getting very low interest rates at the moment, obviously, but the attention is remaining very much on Sydney and Melbourne's housing market, and that's where all the growth is at the moment. Well, if you have a look on an annual basis, Sydney property values are up about 15.5%, Melbourne about 11%. They're slightly lower on an annualised basis than their peaks. If we look since the market started to grow about 2 years ago, Sydney property values are up about 25%, Melbourne up about 18.5%. But what we're finding is the lower end of the housing market is definitely starting to slow. And I think what we're finding is people are starting to get priced out of the housing market at that lower end. And that may obviously have a bit of a snowball effect and start to slow the rate of growth. But I think while we've got these low interest rates, we're going to continue to see some growth in the market unless Reserve Bank and APRA step in to do something to curtail the amount of lending at the moment. I think spring's going to be the real test for the market. It was a really strong spring last year. This winter's been quite strong though. We've seen a lot more properties taken to auction than what we usually see. Auction clearance rates have been generally above 70% in Sydney over the last 5 or 6 weeks, around 65 to 70% in Melbourne. So it's a very strong winter. And as you said, the real test is going to come in spring. I have my doubts that this spring will be as strong as last spring. Obviously because property values are much higher, a lot of people have probably already purchased. We know investors are very active, but the best time to be investing was 18, 24 months ago before we'd seen all this capital growth. So it will be a very interesting spring selling season this year. The thing with first home buyers at the moment is they're still not very active in the market. Probably being a little bit cautious, maybe doing the right thing and knowing that interest rates aren't going to be at this level forever, so not necessarily all jumping back into the market just because we've got low interest rates. But if we do see a slowdown in that lower end of the market, that is good news for first home buyers, but better news would obviously be a lot more supply at that lower end of the market as well, which would help to lure first home buyers into home ownership. So I don't necessarily think that we're going to see too much of a ramp up in first home buyer demand over the next 6 to 12 months. I think it's definitely going to contribute. I mean, not a lot of people take variable mortgages. Typically around 13% of new mortgages are on a variable rate, and 3-year fixed is 2 or 3 year fixed is usually the most popular, not the 5-year fixed. But I guess it's reflective of the fact that the funding costs have come down. Also, probably indicates that they think even whether we get an interest rate hike or an interest rate decrease, that interest rates are going to be low for some time yet. If they're prepared to offer that rate for the next 5 years. So I do think that it will have a stimulatory effect on the market and see more buyers taking out those loans at the moment. Our view is that to the remainder of the year, interest rates will be on hold, and probably our view is a hike sometime next year, starting sometime next year. Not really sure when that is. I mean, if you look at inflation data at the moment, it's high, but it was high over the first 2 quarters of the last year, not the most recent, so it's probably going to fall over the coming quarters. GDP print for March was very strong, but again, it's probably going to ease back a little bit over the coming few quarters. So really, the Reserve Bank doesn't necessarily have to do anything at the moment, but it does have scope to hike rates or reduce rates, whichever way it sees fit.